Options traders and investors. Matt Buckley, call sign Whiz, the primary model portfolio manager here at TGO. And my apologies for not getting out of SITREP yesterday or on Tuesday, but we've been a little busy doing our live trading sessions. Held 2 live sessions on Tuesday, and we actually had 3 sessions yesterday. We had one trading the open. We had one right around 1 o'clock so we could trade the Fed announcement, and then we had trading the close. So been a little busy to knock out these situation reports, but let's get back to it. First, let's cover what happened on our flight schedule this morning. Had core retail sales, which is obviously X autos. It's a indicator of core retail activity excluding autos, and it came in flat. Now, regular retail sales, which includes autos, actually went down. So this is not good news, folks. And for those of you in Top Gun Options that are subscribers, some of our retail positions, this is the main reason I said, hey, we're not going to bail out any of these positions just yet. Because these retail sales numbers were coming out Thursday morning and already looking pre-market like we're going to be seeing some significant profit in a lot of our positions. So again, doing the Braveheart hold until you really let conditions on the battlefield mature, and if these are really going to work out in our favor this week. Also, PPI coming in a little lower than forecast, and also core PPI as well. These are indications of inflation, and you also see that gold's indicating down a little bit pre-market. So PPI, why traders care, it's a leading indicator of consumer inflation. So when producers charge more for goods and services, what do? The higher costs are usually passed on to the consumer, and that's what we start measuring as an indicator of inflation. So PPI and core PPI really not coming in down a little bit is going to help the dollar out, and it's going to impact gold a little bit. And we put on some gold positions yesterday. But let's talk about this. And let's take a look. Let me just make sure the futures are still indicating where I thought they were and what kind of open we're going to see. Yeah, the futures are turning south here. What's going on, folks? Obviously, yesterday, the biggest announcement in a long time out of the Fed was that they started tying their the purchase of mortgage-backed securities and their buying of long-term treasuries, selling of short-term treasuries to an unemployment rate. Instead of just saying, hey, we're gonna do this for a time period until mid-2015, for example, they're gonna tie it to the unemployment rate, to getting unemployment underneath 6.5%. Now, let's ask a question here. Let's take a look at our flight schedule and what happened last week. Obviously, last week when unemployment was reported, it went down to 7.7%. Okay? Great. That's good news, right? Actually, it isn't good news if you really think about it, folks. So here it is. It was 7.9% last time, 7.7%. But let's take a look at a chart of unemployment, folks. And the last time we saw unemployment under 6.5% was when? Right around November of 2008, folks. September, October, November. There we go, folks. Right around here is when we saw 6.5% unemployment. November of 2008. So the Fed announcing this, and they also announced that they're going to up their purchases per month of mortgage-backed securities and treasuries to $85 billion a month. Okay. Now they also said that they didn't expect inflation to start rearing its ugly head. They have it in target. They're saying inflation's in target with their right around 2%. But this is just absolutely incredible, folks. This is not good news. Okay, and that's why the futures are lower this morning. Let's take a little history of time here. Financial tsunami, end of the world, market, cats and dogs living together, mass hysteria, right? And then George Bush and Hank Paulson did the worst thing they could have ever possibly done and got involved in capitalism. They got the government involved in capitalism. So right about here is when we did TARP or whatever the hell we wanted to call it, but the government got involved in bailing out markets. Horrible. Absolute worst policy decision ever. And then what happens? So Bernanke becomes the bartender, gives a bunch of liquidity punch to everybody in the market, and they party like they're in Vegas. They take away the punch bowl, say last call, and what's the market do? It tanks. Well, God forbid we let the market tank, and we do another round. That's called QE2. Okay? Take the punch bowl away, last call, and the market tanks. So, well, again, geez, God forbid we let the market tank and we get involved again, and there's Operation Twist. And then after taking that, punch bowl away, market tanks. And here we go, QE3 infinity. And then what Bernanke did yesterday. Now, I'm just a political science major, former Navy fighter pilot. I'm no rocket surgeon, but big line, less big line, small line, smaller line. The effects of quantitative easing have diminished with each dose. Let me tell you why. Initially, traders like this. They love liquidity in the market. They love partying, so to speak. Spend a lot of time on Wall Street, and I can tell you that for a fact. But they also tend to wake up eventually and smell the coffee that's brewing as the sun rises and realize that this isn't good. Yesterday afternoon, the Fed chairman said the consumer is weak, consumer confidence is poor, household confidence is poor, business investment, CapEx is weak. It's just not good. So the Fed is having to, Bernanke's getting airborne in his helicopter and dumping more liquidity onto the market. That's not a good thing, folks. That's clearly not a good thing. And this, I'm going to let you tell you something here that I truly, not only being a bartender, Bernanke's an enabler. He is allowing the government to spend more and more and go deeper and deeper into debt. At these extremely low interest rates, folks, we're currently at $16 trillion in debt. It's just, you can't even fathom how much in debt we are. At these low interest rates, nobody really cares. Obviously, the president doesn't care. But I'll tell you what. A balance sheet implies what? Balance. And I covered this yesterday in several of our live trading sessions. Fed balance sheet. Let me show you something. The Fed is expanding its balance sheet to nearly, it's going to get up around $4 trillion. What did I just say? We're in debt alone to the tune of $16 trillion, folks. Look at this. Of course, the chart's in billions, not trillions, but you can do the math there, folks, and realize that we are on the Fed's balance sheet. He is loading up $3 trillion. We're going to get up to $4 trillion, folks. And to quote Colonel Kilgore, you ever watch the movie Apocalypse Now? After the napalm strike comes through, and he says, "You know, someday this war is going to end," and he gets up and walks away and leaves kind of everybody hanging with end. Well, let me tell you something, folks. Someday this quantitative easing is going to end, and the Fed is going to have to unwind these positions on its balance sheet, hence the term balance sheet, right? It says it right there, balance sheet. That's not going to be good for the market. The day of reckoning, when it comes, I sound like the crazy guy in the corner, right? The end is near. The end eventually is going to happen with this, and it's going to be devastating for the market. The Fed's playing a very dangerous game of chicken here. Now, the Operation Twist, where they were selling $45 billion a month in short-term treasuries to buy those longer-term, they really can't sell any more short-term treasuries because they're what we call Winchester. It's a call we make over the radio when we're out of ammo, because the stockpile of these things gone. So instead, they're going to fund those long-term purchases by adding reserves to the banking system by printing money, folks. In case you didn't know, the U.S. Treasury, the Federal Reserve, doesn't have money. They're a government institution created by and allegedly for the people, not for the banks, but for the people. So they're going to just start printing money. They're going to run to Office Depot, buy more printers, buy more ink, and just keep printing money. Folks, that's not good. It's not good for our nation, and it's just not good for our system. And a smart Marine, which I know is a contradiction in terms, no offense to my Marine buddies, gave me advice one time. When in a hole, cease digging. We're in a hole here, folks. We're in a deep hole, and Bernanke just grabbed, and he ditched his shovel and just grabbed a bulldozer with a backhoe, and we're just going to keep digging, folks. We're just going to keep adding fuel to this fire. That's not good, and as the futures are showing us this morning, and as the market's going to open lower, normal people are standing around like, wait a minute, I thought all these doses of QE infinity were a good thing. Here's what really breaks my heart as an American, spelled with a C, not a K, is this. One of the main reasons that Bernanke's undertaken this policy is something called the wealth effect. Look at that chart, folks. Bernanke looks at this chart and says, well, everything's going great because Americans feel richer. You feel richer, folks? I don't. I certainly don't feel richer. You're supposed to feel richer. We're all supposed to feel richer because of what the Fed's been doing. That's that's one of the dumbest policies I've ever heard. You know who not only feels richer, but are richer? Banks, Wall Street. And reading in the Wall Street Journal today, it turns out that the Obama administration, we have some of the highest corporate tax rates on the face of the nation, I think, or the planet. I think Japan beats us. So they want to lower corporate tax rates, which I'm all in favor for, but guess what? They're saying we don't have time to lower tax rates for small businesses. Isn't that absolutely disgusting? So Google, you ready? Avoided $2 billion in taxes, essentially, with Caymans and Bermuda and all sorts of other stuff. And Schmidt, I think he was going to be tapped for a secretary position under Obama's administration. Look at all these firms. Also, Warren Buffett's firm, Berkshire Hathaway, is taking some real estate assets from a longtime investor before December 31st so they can avoid taxes. So isn't it great that all these limousine liberals who believe in paying their fair share and everything like that really don't? So they're doing all this stuff to get under the wire. If they, in fact, believed all the crap that they spewed, they wouldn't. But they're hypocrites, folks. So instead of helping out small businesses, the true engines that power this nation and will get us out of this, the mess we're in, we're going to focus on the people who need help the least. Big banks and big businesses and major corporations. Isn't that great? Isn't that nice? It's just absolutely amazing, folks. And as an American, I kind of weep for where we are, but as a trader, I think it's absolutely phenomenal. We're having a blast here at Top Gun Options. We're having an absolute blast here at Top Gun Options. In our primary trade alert model portfolio, we have 3 or 4 weekly options positions that are going to, based on what happened yesterday and hopefully barring any huge major events today or tomorrow, are going to profit for a nearly $12,000 gain in the primary trade alert model portfolio alone, let alone in our, let's take a look at how the, this is the live trade brief model portfolio. Let's see how we're doing month to date, we're December 13th. I mean, look at that, over $16,000 in profits on about $50,000 in haircut in about 8 days of trading. It's not too shabby, nearly 30% return in 8 days of trading. So again, not good for the nation. What Bernanke did yesterday means that things are bad, and the market's going to react accordingly. So get ready, folks. Again, the day of reckoning is near. Bernanke's trying to kick the can down the road, targeting 6.5% unemployment. And by their own projections, folks, the Fed is saying that's going to be mid-2015. So hang on. Get ready. Get your gold, your bullets, your butter, and some water together, because now things are about to get interesting. And notice I didn't even mention the words fiscal cliff until I just said fiscal cliff, okay? This is more of a big deal to me than the fiscal cliff, and it's not good. But again, folks, we're having a blast trading this stuff at Top Gun Options. Get off the sidelines. Outflows from stock funds. I mean, people are really hiding and putting their money under mattresses or burying them out in the yard, and especially at today's interest rates, you're probably getting a better return out in your yard. But here at Top Gun Options, go to topgunoptions.com/TA-LTB, and you can get airborne today on a 14-day trial, and come check it out. I spent about 6 hours live trading yesterday, and we actually saw some significant profits in the model portfolios from our morning trading session to our afternoon. For example, on a gold iron condor. And you can watch the replays of yesterday's live trade brief at 0900 and then the one I did into the close. And Bernanke essentially did just about everything I said he'd do, and we set up trades based on that and added them to the model portfolio, and we had a very profitable day. So you can trade with me for 14 days in a primary model portfolio. You can trade with our volatility arbitrage trader in the intermediate advanced live trade briefs and trade alert service, or you can do what just about everybody does who comes aboard Top Gun Options. Try both. That's essentially over 8, maybe 10 hours of live trading in 2 weeks, in addition to our standalone skill-based trade alert service. And you can do that right here at topgunoptions.com/TA-LTB. So don't trade this market solo, folks. Trading is combat. There's a winner and there's a loser, and at Top Gun Options, we end up on the winning side a hell of a lot more often than we end up on the losing side. Okay, so can't help you if you don't want to help yourself. If you're just staring at the screen, wondering what the hell's going on, or watching Comedy Central, CNBC, and trying to figure out what's going on solo, I really do wish you luck. It's like you're flying around in a Cessna and you're fighting a couple joint strike fighters. You're going to get shellacked. So don't let that happen going further. Go to topgunoptions.com/TA-LTB. Get airborne today. And you can get involved in our new weekly options trading service. Like I said, we have about 4 positions in our trade alert model portfolio that are going to potentially close for nearly a $12,000 gain in 4 days. That's not too shabby, folks. That's discipline, that's risk management, that's superior execution. Got to get going, got to trade the open here. So happy hunting, make sure you hedge, and I'll be back tomorrow with WCI's Wealth Creation Investing's Friday market wrap-up. We'll see you.